gaskiya.
Okay, so if we want to say this is a valid M, we draw Fibonacci from the highest point, right? You know what? Since I wasn't recording, I believe, let me just start. Since everyone is here. Let me just start recording.
Ah! Yeah, you're right.
Okay. Okay, so I was telling, I was showing people how to load the volume chart. How to load it? You go to File, open Data folder, and then you go to MQL5 here. Go to Experts, Advisors, and then you paste it inside here. After pasting, you come out. You go under Advisors, Experts, under Experts here, and then you refresh. Right. After refreshing, you are gonna see the volume chart here, Angel volume chart. You're gonna see it here. So now what happens is the volume chart works on boom 1000, boom 500, crash 1000, crash 500. It works on the range break markets, and it works on the volatilities, but except the volatility 10 1S, these 1S ones, it doesn't. So volatility 10, yes, 100, 5, 50, and 75 on them. Send you the settings for these other ones, the numbers, but for now let me demonstrate with volatility 75. So you just open the chart for volatility 75, 1 hour chart, and then you drag the volume, your Angel volume, modification of signals, allow algo trading, inputs. Under Renko ticks, you change to Renko pips. Under the value here, that's where for volatility 75, I use 60,000. 60,000. So down here on current window, you click on new window. On this value, you just add in some zeros. You just add in some zeros, and you're fine. When you click OK, it's going to open in another window here. We can see it here. And then I forgot to send my tin plate. I'll send it to you. You go to charts, you load my tin plate, draw fire, and this will happen. This will be the volume chart. So now we have that. What I was trying to say now is this, like, let's say today, what could I have traded volatility 75 on the volume chart today? Yes, I could have traded it and I could have made money. How? I was showing you that actually, I was saying like, actually I traded it. I was showing you something here. I was showing you something. You see here, I traded it. I made $13, $13. I scalped it. The volume chart today, 27, as you can see. So there we are. And I will show you where I traded it. But let's look at this other part because I wasn't around. This is today. So this is today. So what I was showing you is that on the volume chart, when we see a W or an M, it's not the same as the 30-minute time frame for our normal strategy. Our normal strategy is on the 30 minutes. Let me load the tin plate, Joe. Our normal strategy is here, right? This is our normal strategy. And our normal strategy today, did we have an opportunity today? Yes. This was the opportunity. Look, we had like a W, right? So I was trying to teach you something. I was like, what is an extended W? This W is an extension. Why? Let me show you something. The lowest point of the W is here. The highest point is here. So when it was coming back, it went through. It went beyond this point. So now I showed you about my Fibonacci. I was like, under the properties of the Fibonacci, you add these two values under levels. The levels, you add 1.232, which is 123.2, and 1.326, which is 132.6. You click on add. When you click on add, it gives you a value here. You write down this, and description, you write down that. And then once you are done with that, you add again, and then you write this and this. So let me delete this. So you're adding what I call the minor zones. I call them the minor Fibonacci zones, market maker zones. So these are the minor zones. So what happens with the minor zones is once you add them, okay, and they'll be saved already. So what you do, for you to determine if an extension of a W or an M is valid, this is how you determine it. You will draw Fibonacci from the first part where the W was going up to the highest point, right? Highest point is here, right? And then, so automatically, we can see that this wasn't valid because why? It pierced, it went beyond the 161.8. So it's not the W that we trade, because the W that we trade mostly, you know, it goes up smoothly and comes back smoothly. So this one wasn't really our pattern. So let me admit this. So okay, we'll come back to the M's and W's on the 30-minute, but I want to show you the volume chart to use it. So the volume chart, you use it in two different ways. Let me check whose mic is making noise. One's mic. Okay. So the volume chart, you trade it in two different ways. You can use it for sniper entry, and you can use it to trade scalping. Like you can use it for merely trading. So what I was trying to show you, like today, what I was trying to say is, did we have opportunities on the volume chart? Yes. We had opportunities today. We had this M here, which could have been a scalp. After the second block here, you enter 0.02 on a $20. You make money. After 1, 2, you're out. You're out of the trade. And then, where else did you have a trade? The trade that I made, $13, I took it from this kind of M, this one. I entered on the second block here, and I was out here because there were two white blocks here. I just entered here, then I was out of the trade. So now, what I was trying to show you, what qualifies this as a W, because it extended, and I could have taken the trade here and come out with here. What qualifies this as a W for scalping on the volume chart? It's because if we can measure the first point where it turned going up and the highest point here, and then we get my Fibonacci, and then we draw from the lowest to the highest. After adding my minor zones, you will see my minor zones are here, 123.2 and what? And 132.6 here. So the price went up, came down trying to form a W, but it did not resist on the same level. It extended. So this is an extended W, but if it extends, it has to reject on the minor zone, which is the 123.2. If it breaks the minor zone, it's no longer valid W. It's a pullback and a continuation of a trend. So if it rejects here on 123.2, gives you one white block. On the second one, 0.02 on $20, you snipe, you hold it. After 1-2 blocks, you're out. You make your money. You scalp out. And then that's an extension of a W. But if it broke the 123.2 and went down here to 161, no, we couldn't have traded it. It's invalid. It's not a W. It's a continuation of a downtrend. Hey, someone's mic is making noise. I think mute. You can mute your mic because there's some noise in the background that I hear. Okay. If we come here, after taking this W.
Bro, I think.
Yes?
Bro, I think no. You since you are the host of this meeting.
Yeah, I can mute them.
You can just mute all of us. Yeah, whoever has something to say, he can always unmute himself and then he says something, just like that.
Yes, that's fine. Okay, so now if you can see after this W, this is the volume chart. We had another W here because this one is a W, of course. Another one joins in here, right? So how do we validate this? The first 10 happened were here. The market went up. Mind you, this is today. This is my scalping strategy. You are doing this today. Even yesterday, there were opportunities. So you have the lowest point here. You have the highest point there. And how do you validate this? This one, we don't even need to draw Fibonacci. Why? Because came down to the same level, 100%. Like if I draw Fibonacci from the lowest to the highest point, right? What do I see? It came exactly at 100% and rejected. So if it broke through to 123.2, it could have been an extended what? An extended W again, which you could have taken is valid, but if it breaks beyond, it's not valid. So this one was valid because it went straight to 100%. Ws are in different shapes. Some they come straight to the support where they turn the first time, and then they reject. Some they pass a bit. If they pass a bit, they must land in the minor zone or they must be the minor zone. That's when they are valid. But if they break the minor zone, they're not valid. The same as the M's. If an M it goes down first and then it extends beyond, you have to draw Fibonacci from the highest to the lowest. And when it extends beyond, it has to land in the minor zone. If it breaks the minor zone, it's not a valid M. Right? Some M's will still come to the same level, 100%, and they'll reject. So they are different. Some M's will come like, they won't go to the 100% level. They'll fail to go to the 100%, which means the buyers are not strong enough to test that area. They are also M, right? They are also valid. So these are the different shapes of the M's. Some are in the same level, some they pass a bit. Those which pass a bit must not pass the minor zone, whether it's an M or a W. Ones which fail to pass, even reaching 100%, are still valid because they are showing that our buyers are not strong. The ones which fail to reach 100% in a W are showing that the sellers are not strong enough to reach 100%, are also valid somehow. That's how you choose those things. So now this was a valid one. After 1-2 blocks, this one actually I missed it because I wasn't around at that time. This was a good W. After the first block opens, understand it's forming. It will be white. Wait for it. When it moves in momentum over the 60,000 pips, another block will open. So when another block opens, right, When another block opens, that is when you take your 0.02 sniper entry on a $20 account. Once you take that one, you hold it because it will go above the 13 period moving average, as we can see. When you see like a red block wanting to form, don't just close immediately, right? Wait for price to confirm the second block closing, or it has to close below the moving average, the 13. So once you are in, just hold the trade, because it will be running above the 13 period moving average. Then if it reaches maybe like we see here, this is a stance. After the first red block, when the second one opens, when the third one opens close to the 13 period moving average, you can close your your buy out. So the trade that I took it on this M. This M failed to reach 100%. But I took it as a scalping trade. I wasn't out here. I was out after the second block here. I was out. Yeah, with some small profit. And then here, as we can see, it came and formed and tested support. It formed a W, you can see. So here you could have scalped again. You could have scalped because after the first white block, second block here, you could have bought the market. Because this is like a W. You could have come out after on this candle, third one here. This is still some money. This one, it has extended too much. Is it valid? I don't think it's valid unless it creates a new M here, because the highest point is here, the lowest point is here. If we get the Fibonacci from the highest point to the lowest point, right, what do we see? We see it broke our 123. It even went to 161. It's not valid. This is not an M. It's a pullback and a continuation of an uptrend. So if we want an M, it has to form a new one which is valid. It has to M formation. So you are scalping now. I'll show you how to scalp now. Like let me go to yesterday. This is today. Let's go to yesterday. Yesterday, you see we had this W on the volume chart, which you could have held. This is a lot of money. And then 1, 2, 3, you're out. Would have been out of that. So you can scalp. You can always see moves happening. Like here, you can see there was an M. You're in, you're out. Those are just scalping trades. This is not valid. It's very far. It's just a pullback and continuation of the trend. This one was kind of like a valid M, because if I can mark, let me see if it's valid. Mark the lowest point. Take our Fibonacci from the highest point. You see, it rejected exactly in the 123.2. After one block here, second you're in, you're out after 1, 2 blocks here. This is a scalping trade. That's why you use a big lot, because you know that if it moves, I'm gonna make money. So 0.02 is okay for $20. And you'll be scalping the whole day. You'll be looking for this and M. You enter here, 1, 2, 3, you're out, right? So those are scalp trades. You see what it's 75 every day. There's something. There's an M here. Didn't go far. We have a W here inside here, which also worked, and we had a big M. We had an M here, I mean, with a big downtrend. So look for the pattern also on the volume chart. Now, this zigzag indicator, which is printing also along the price, like the M's and W's, settings you must use for this zigzag thing, right? The right settings you must use for the zigzag color. It's on MT5. Under the inputs, on the depth, just put 6. You change from the default is 12. Just put 6. Just put 6, then okay. And then you'll have my setting of it. So That's for scalping. Was this valid? Let me see. This W. This was the lowest point. I don't think it was valid. This was the highest point. Take the Fibonacci. It came full way. So it could have been a continuation of a downtrend, although it turned at valid. That's what we must know. We have here, you see, this was an M come to 100%. Like if we draw Fibonacci from the highest point to the lowest, we'll see this, it went down to 0%, went back to 100% and rejected. You could have entered a sell here. Could have entered a sell, held it and come out somewhere here. If you want, you can come out when it crosses the moving average. So you can hold a trade until a candle breaks above. That's up to you. But for me, I'll be scalping this thing. It's not all the time you'll know that the trend can take long. So this is what's happening, guys. You see, M, yeah, in. When this happens, you can go out. If it continues, you can go in, say, okay, it was a pullback. I made some profit, but let me continue. Then up to you. But I'm just showing you W. So that's the volume chart. Now, how do you use it for entering also based on our strategy? Based on our 30-minute strategy, how you use the volume chart to enter is basically if we spot, let's say an M on 30 minutes, the moment it's going up to retest, like, okay, let's say here, the lowest point, the moment it's going back to retest here at 100%, it's either it breaks and goes to the what? To the minor zone, right? So the time it's approaching 100%, you have to shift to the volume chart. The time it's approaching, because it's created the first leg. So the time it's approaching 100%, whether it will go to 123 or what, you have to shift to the volume chart. So the volume chart at that moment, let's say it will be up here also. The moment the volume chart breaks below 13 period,